Welcome back to this special edition of Inside Story from the London Stock Exchange, the heart of Europe's biggest financial centre. We're discussing the fallout of the financial crisis on the European continent. With me is Justin Urquhart-Stewart of Seven Investment Management, Alistair Heath, editor of City AM Business Newspaper, and we're also joined now by Howard Wielden, who is a senior strategist at BGC Partners. So welcome back after the break, gentlemen, and to you, Howard, for joining us. I want to start with you, Howard. Russia, they closed the stock market for 2 days. Why did they do that? And should we be talking about it?
Violent movements in the Russian exchange. This is a young exchange. They're getting used to the essentially basic regulations of a system, and if they don't stop trading, then they have a major problem that the whole thing could actually implode. So I think they're right to do it, although it does seem sometimes a protracted period of closure. But that, I think, one puts down to a degree of inexperience in terms of the systems that they have in comparison to other markets.
Did it have, Justin, any global effect?
Well, actually, of course, when that was happening, most people were looking towards Wall Street, so the impact was somewhat masked. But yes, it did have an impact, because actually we do take notice of actually what's happening in Russia. Of course, Russia is a commodity exporter. That's primarily what we look at there. But as Howard said, this was an adolescent market. It's learning, and of course, it is a fairly sort of wild market as well. Insider trading is allowed there, so all sorts of elements we're not used to here. But it does have an impact. But Russia's got to develop, as it develops its regulation, into a more mature market. Mind you, I could see them smiling very wryly at our markets and seeing us behaving in an equally erratic manner.
Alistair, an immature market, will the problems in Russia, and the stock exchange anyway, have an impact on ordinary Russians?
Unusually, I suspect not, really, because in the case of Russia, there's still a big dichotomy between the financial economy and the real economy that most Russians face. Basically, Russia is still growing very strongly. They've got all these huge exports of commodities. They are a petrodollar country, really, and the huge energy producer. Ultimately, I think that's the real story with Russia.
Okay, Howard, let's come back to Europe. Europe seems to have got off fairly lightly, apart perhaps from Spain. Does that mean the ECB is a better bank than the Fed?
No, it doesn't. I think what we have to remember is, and we look back at the history of since the euro introduction in 1999, and we look at what the dichotomy of the European economy compared to the growth that one was seeing in the UK and the US. Their growth was virtually non-existent between 2000 and 2004, and even subsequently it was at a much slower pace. But there are various other issues too. Parts of the European community, of course, don't have the high level of mortgage-based house ownership that the UK and the US have. So it varies from country to country. But these are all aspects which do make a difference.
Alistair, I want to talk about regulation now and the future. Gordon Brown, the British Prime Minister, a long-time finance minister, wants a beefed-up international monetary fund, for example, to try and predict crises like that.
Yes, I mean, I think that, to be honest with you, is a lot of nonsense. Ultimately, some of the big organisations did predict or did warn that there would be problems ahead because of the huge credit bubble and so on. That sort of thing won't work, basically. The current problems are a failure of the whole economic and financial establishment. There have been some exceptions, but overall, most people did not see this coming, and therefore creating yet another massive international body just to monitor these kinds of things would fail.
Work.
Yes, it would fail.
All right, Justin, Brown, Sarkozy, Barroso, Merkel, they all want some kind of reform. They haven't said yet what kind of reform, which is a fairly European reaction to a crisis. But what form or what sort of reform does the city think would be necessary?
Well, what they want is something which is seen to be politically acceptable. That's to say, I'm a politician, I've done something about this, and those are bad guys over there, which of course is absolute rubbish. We did have one organisation which is already there, already charged to look at these issues straight away, and warned twice in the past year of the issues, and the banks took no notice at all. It's the Bank of International Settlements, which is the central bank's central banker. That's what it does. It's already there. So what should the city actually want to have happen? The answer is, well, the Bank of International Settlements should continue doing what it's doing very effectively. You can over-regulate, but that's really not going to be the issue. The key issue is how that is actually operated by the banks themselves. Are you running a US rule book, or are you able to operate within guidelines, which is basically how the FSA likes to work over here.
Do you agree with that, Howard, or do we need a better early warning system to predict these kind of looming crises?
It's a nice idea to believe that you can have an early warning system that people would take notice of, and as Justin says, and I totally agree with him, that there is in essence an early warning system there. If you look at the UK, of course, our regulatory system changed significantly in 1997 when the Bank of England was essentially freed, and we put 3 regulators in as opposed to the one that was there, i.e. the Bank of England was the regulator for banks. The system clearly hasn't worked, and so therefore you can over-regulate, and I think we've seen a great example of that. We do need change. Yes, we do need to readjust, and I think if we move over the other side of the water and we look at what Hank Paulson and the U.S. Treasury was saying last week, yes, it does need to be looked at in depth. But we also have to remember that the same applied there. Regulations were put in post 1933, and over the years they've all been broken down. So it's all very well saying you need them and even putting them in, but if you discard them, then this is the result.
Congress don't seem to be liking the deal, the Paulson deal, does it? But we'll have to sort of stick to European matters. Alistair, do national regulators work on cross-border issues, or do they only work in the countries they're regulating?
Well, they probably only work in the countries they're regulating, but I don't think that's the real question. The real question is you had plenty of regulators, you had plenty of bodies, plenty of international institutions, and they all collectively failed to understand what was happening. So whether you had these merged bodies or still just national bodies, I don't think you'd have seen much of a difference. Ultimately we need to change the way we conduct monetary policy. I think that's the most important thing. It's not about shutting down some innovation or shutting down some banks or shutting down some markets. It's about realising that you can't just go along having a bubble after another bubble, one every decade, and then trying to prop it and hope that, trying to prick it and then hope that everything's okay.
The $64 billion question, and the last question to all of you, beginning with Justin. What are the big decisions that have to be made now to avoid further meltdown?
The big decision, as far as I'm concerned, is how much the central banks and the governments behind them are willing to put up, in order to make sure the system continues to work.
I follow that with also how we're going to pay for this and how long is it going to take us to do it. Are we entering a 10-year period where life is going to be very, very difficult? I think we are.
And Alistair?
I think we should be very careful not to shut down the financial system by over-regulating it and basically banning a lot of the practices that actually are quite good if they were done better.
Are we paying the price of one news magazine, what it calls the price of greed?
Not really. I think human beings are greedy creatures in general. They're greedy in whatever economic system they operate in, be it communism or capitalism or social democracy or whatever it is. So I don't think really it's greed. I mean, that's just human nature. We're paying the price of having made huge policy mistakes over the past decade.
All right, we'll leave it there. Alistair, Howard and Justin, thank you all very much indeed. We have to wrap it there. Thanks for your thoughts and thanks for joining us here in London. And thank you for watching this special edition of Inside Story. We welcome your comments and suggestions. Please email them to us at insidestory@aljazeera.net. From me, Stephen Cole, and the whole team, goodbye for now.